Hello, guys, and welcome back to Financial Options with Thumper. And I think we all had quite the week this week. A lot of ups and downs. One thing I want to do is like show off my Friday P&L. The daily was up $15,000, but I wanted to like caution you when you're going out there watching YouTube videos that one picture doesn't tell the whole story. I think Knight Rider from our Discord server said it best. Today really looks like a big gain. It did a pretty good job wiping out my paper losses. So one picture here, I was up 15K on Friday, but that's only because I was down the rest of the week. So looking at the progress report, you can see that even though we had the nice finish on Friday, I'm actually down about 6,300 on the week, another 4% going the wrong direction. And it's easy for YouTubers to like show a picture and say this is what I did best and make everything look pretty. But I don't want to be one of those guys. I'm gonna show you like this is what happened to me. Like I play aggressively. I accept that. It stings to see that I'm back all the way down to like where I was in February or January. But I don't want you to think that it's all works 100% of the time every time. It doesn't. And if you're putting out there using margin when the stuff goes against you, you will feel it. So just over the course of like these 2 weeks, that's like $22,000. I'm down. So it happens, and I even had to like realize some losses, and so my realized premium for May is actually in the negative for the first time ever in my options trading career. So that's a new thing for me. So anyway, here's all the trades I did this week. This is probably what I typically do, is just a couple of trades. So I'll run through the whole thing. On Monday, I opened up a Netflix put, the 460 strike in June. Maybe I shouldn't have done that based on where my margin was at the time, but it felt like a safe play to me, so I put that one on. VTRS, I closed out some leaps for a small profit to free up some cash. Jerry from the GW channel was the one who pointed me in VTRS, so thank you for that nice little gain there, Jerry. Palantir, you already know I own 1,000 shares, so I decided to sell the 24 strike call against those. So a little covered call situation, collect a little premium just in case Palantir didn't like come back up. And I also want to take advantage of the dip because Monday Palantir was down a little bit. I think it was trading at like 20 when I put this on. So I sold 10 puts against Palantir at the 18 on the 18 strike and collected a buck 40 for that. If I was put those shares, that would be a cost basis of 16.59, I think, which I'll gladly pay that for a Palantir, and that would also average down my 1,000 shares I already own. So that's why I put that Palantir put on. And I did those both on the same day. We'll get back to that in a bit. Another trade I did, I bought some VIX puts. VIX was up to like 26. Like it's going to go back down to 19 at some point. So I bought some puts to see if I can make some money off that. This position's up about $100 overall. Not as much as I was thinking would happen. So I might close it out on Monday if it's still at $100. I wasn't looking to make a lot of money off this play. I probably should close that out Friday. But it is what it is. I'm in this for at least another day. And then Art K, on Thursday, a day before expiration, I decided to roll my 110 ARC put, and I was able to roll it out about a month and lower the strike price by $3. We got like a weird 0.96 here. I assume that ARC paid like a special dividend or something. I haven't really looked into why that's a thing, but I was able to roll out and down. And I stuck to one contract because I already have one contract on it. And due to margin expansion this week, didn't really be putting on too many more new things, which is why I'm wondering if Netflix was a good play or not. We'll find out. Stay tuned. With all that said, I think we found like an example for new people that are asking, why are you guys selling these contracts? Why not buy them? Well, because we're looking for a decay. And if you saw, I placed both these trades on at the same time. I put a call out saying Palantir is going to go down. I also put a bet out saying Palantir is going to go up. and Pelletier stay in the middle, but yet I gained value on both of these positions because as time progresses, we have theta chewing away. And also in this particular case, don't expect these to be theta gains right here. We also have Vega and IV being pulled out. So that also gives us profit. So options, once they're created, they're marching to their demise. And as that happens, you can buy it back for less and less and less, assuming the price stays flat or barely moves. So that's why a lot of us are selling contracts. We're not on the buying end. So I just thought this was a good example where you can see it works on both ends here. I'm not particularly right on either one because like they're both inverse trades. So we'll see what happens. And another thing I wanted to talk about in this video was like the sunk cost fallacy. So one of my trades I was looking at, well, let's talk about the definition first. So the definition of the sunk cost fallacy phenomenon, where a person is reluctant to abandon a strategy or course of action because they've invested heavily in it, even when it's clear that abandonment would be more beneficial. Basically, in like poker terms, you're pot committed, so you make poor decisions because you're trying to make back money you already have in. And I put this picture up because Arc K, this is the one I rolled 2 off my 110 put. Ignore the 105 for this conversation. I rolled the 110 down to the 106. This contract has over a month left to go, and it was at 30%. If this was not part of a roll, I probably would have closed this already because 1 day gain, 30%, that's sweet, take it off and go. But because it's part of a roll, and like we like to link trades together when we're thinking options, I didn't close this position yet. And I wonder, am I falling victim to the sunk cost fallacy? Like, is the right play here to close this at this gain? Like, the market doesn't care what your previous trades were. Every trade we make is an independent variable. So why do we as humans try to link them together? It's because we don't want to take a loss, so we link them together. But so this is something I want you to think about when you're rolling a position. Try to treat this position as its own thing. Like, don't worry too much about making back all your money from your previous trade because that's in the past. You can't change that. This is an entirely new trade. To further my point, I'm going to go into a trade I closed last week, and that's Fastly. You guys saw I had a Fastly September put out here that I closed for a 1705 loss. I don't think I went into the fact that this was part of a roll. At one point during this trade's life, I could have bought back at like $2. And had I done that, this trade would have been a positive $2,600 gain. Instead, because I was trying to make back the loss because it was part of a roll, I held on to it, and I was forced to close it due to margin expansion. Well, wasn't forced to, but it was the one that I just chose to. And instead of getting a $26.50 gain, I locked in a realized 1705 loss on this position because I was trying to make back the money from the trade that I rolled from. So this is an example where like that sunk cost fallacy, like I fell victim to this. And combined like from the net worth point of view, which is why my charts are all based off of, like that's a $4,300 swing. I think I'm down about $22,000 in the last 2 weeks, and 20% of it came from this trade because I was trying to defend a losing position and linking trades together. So something I want you to like think about is just unlock your brain. Like you don't roll for a credit every time indefinitely thinking you're gonna win. Like when is that thinking not the best? When should you treat this trade as its own? It's just something to think about. It's like that next level, I think. And with that said, I think that's going to be the end of this video. So something I might want you to think about is like, I want to know your thoughts. Like, put some comments down there. This week was crazy. Like, what did you learn this week? For me, like, I'm looking at the sunk cost fallacy again. Am I making trades the most optimal way, or am I trying to link trades and defend positions that don't really matter? Because once it's done, that trade is finished. I'm looking at the current trade, and like I'm trying to get to that level where I'm not thinking about past trades affecting my current decisions. This week, margin expansion. Were you overexposed or using too much margin? For me, I started at like 30% in the last 2 weeks. Last week, I had to like close a couple positions to avoid being forced to close stuff later. And so this week, I was able to just kind of ride out this volatile session. But for you, if you didn't make those trades already, did you see margin expand? Like, how did that affect your trading? Did you learn from that at all? I think someone in the Discord channel said I'm down like $300, but I got to see expansion, and that's an invaluable lesson. Like, yeah, it is. Did you perhaps do your first roll? I mean, a lot of people found stuff in the money. If did you have to manage a position? If you did, like, leave a comment. Let me know what happened. Perhaps you learned about risk tolerance. Did you find out that you were overexposed and maybe more aggressive and didn't really understand the risk that you're taking on when you're putting on so many trades? Are you going to tighten up that margin maintenance? I know going into last week, I was only at 30%. I've been sitting at 50% a majority of the time. Had I been at 50%, my portfolio would be in a horrible position right now. So I'm lucky that I happened to be down below 30% before this happened. Are you still going to be trading at 50%? Are you going to tighten it up? Are you going to be trading volatile stocks? Like, this week gave out a lot of lessons. I'm curious what you guys learned, so leave a comment, like, subscribe. Thank you for watching. I am not a financial advisor. Any information included in this video is for informational and entertainment purposes only. It is not intended to be investment advice. Please seek a licensed professional for investment, tax, or legal advice.